Good afternoon, everyone, and welcome to our monthly hot stock panel for March. What is it, Joey? Top trending, oh, there it is. Top trending hot stocks to buy now. I've put a couple of different names to it, but that's what it is. Glad that you're here. Glad for all of the people who are brand new to the channel. Thank you for being here, supporting the channel. If you haven't already, please hit the subscribe button. We're hoping to still continue to grow the channel, and we've done so recently by leaps and bounds. A lot of great content that we've been putting out, and a lot of great feedback from you guys in VV Nation. That's right, I dubbed you guys VV Nation a while ago. Thank you for supporting VV Nation. If you can hear us, by all means, please let us know that we're coming across loud and clear. My producer, Joey, say hi, Joey.
Hi, Joey.
He's in the background making sure that everything comes across loud and clear, working on everything on the sidelines. Today, I'm joined with two of my esteemed colleagues, Jerry D'Ambrosio and Patrick France, and they are really good at what they do. They'll tell you a little bit about themselves before they come on, and that's it. So I want to say thank you to both of y'all to be here. And I'm specifically going to go to Patrick for the purposes of he supports our mobile app. Jerry does a lot in between all of what Patrick and I do. So thank you guys for being here and all of that stuff. So let's get into it. Our panels on a monthly basis are designed to tell you what's going on, what you might not know about in regards to stocks, but these are stocks to trade now. Now, I want to put a disclaimer out there in regards to that. The market looks like it's trying to turn over, to move to the downside. Looks like we could be getting a pullback in the market. And, this market has been going gangbusters for a while. And, what goes up must come down, spinning wheels, turn around. That's a great song, by the way. And you want to keep that in mind. So, yes, these are stocks that you can trade now, but I want you to understand that the market's direction affects 80% of the stocks within the market. So be careful with these stocks, number one. And we're going to give you good entry points and exit points in case the market does show that it wants to move down and go lower, to protect yourselves. So I wanted to put that out there, don't just blindly buy into anything that we talk about, but we want to show you stocks that you need to consider to trade now based on what we're going to talk about. All right, with that, we're going to go straight to Jerry D'Ambrosio. He is our manager of educational content. Again, he'll tell you a little bit about himself. He's got 3 out of the 7 picks today, and we're going to start off with him. So, Jerry, take it away.
Yes, sir. Thank you, Glenn. Hello, everybody. Good afternoon. Again, my name is Jerry D'Ambrosio, the manager of educational content with VectorVest. Part of the education department, we have different, I like to call them factions of the education department. We have a lot of good option instructors. We have some retirement guys, and a big part of what I do is more of the swing trading, aspect of our education team. So, I really appreciate you guys being here today. So my 3 stocks for today are TPX, Tempur-Pedic, Trulieve, Tcnnf. It's a cannabis stock, marijuana stock, and MRO, which is an oil stock. So covering 3 different sectors. So the first thing we'll do is we will take a look at our core analysis. So Glenn created a watch list. So let's start with Tempur-Pedic. Its current price is $36.11. We value the company, we value the stock at $55.32. So that's good. It's currently undervalued. It's trading less than what we feel it's currently worth. So that's good. That's a good start. It's up about a little over 2.5% today. It's not in the NASDAQ. So, a lot of NASDAQ stocks are getting crushed today. Actually, you could see this in the exchange column, guys. When it says O, that's the NASDAQ. So you can see a couple of the NASDAQ stocks in this list are down today. But Tempur-Pedic's in the New York Stock Exchange. It's got an RV of 1.55, so that's excellent on a 0 to 2 scale. Good upside potential over the next couple of years. It's a really safe investment. It's got a relative safety of 1.10. It's rising in price. It's got an RT of 1.65. VST, which combines all 3 of those indicators, is excellent as well, 1.46. It's got a good CI rating, comfort index. It's got a buy rating. It's got an earnings growth rate of 25% a share, 25% per year, currently earning $2.03. Again, we forecast them to grow that at 25% over the next year. I like to look at other information here too. It doesn't, they do pay a dividend, small yield, 78 cents. But really good sales numbers here. Annual sales revenue of almost 3.7 billion, and that's a sales growth rate of 21% over the last year. So really good numbers there. Really good company, undervalued, good fundamentals. Next one we'll look at is TrueLeave, TCNNF. Current price is $48.89. It's valued at $36.71. So right off the bat, a little overvalued, trading higher than what we think it's worth. Not such a terrible thing sometimes. We do feel that it has upside potential. It's got an RV of 1.3. It is an emerging market, right? A market that hasn't quite, displayed its full potential yet. So the relative safety indicator is at 0.95. So it's a little bit of a riskier investment, but it is going up in price. 1.61 RT, good VST. 1.33, good CI, really good CI, 1.80. TrueLeave is one of the best, cannabis, marijuana stocks in the market, really. Scroll over to the right, look at the earnings information. Earnings per share, 1.28, growth rate, 28%. So that's what we want to see. Scroll over to the right, 432 million annual sales, growing that though at a really nice clip, 93% sales growth, revenue growth over the last year. I like low float stocks. You guys know what float means. It's just these shares available. Now here we list the outstanding shares, but it's not quite what's available to the public. But what's available to the public is always going to be less than what the outstanding shares are. So 58 million outstanding shares, so pretty low float type stock. Marathon Oil is my next one. Look, it's an oil stock, one of the better ones in the sector. Oil is a sector that's been pretty hot lately. Now it is speculative by nature, I guess. You're talking about oil, so we got a price of 11.72, valued at 8.69. Fundamentals are really never that great with these types of oil stocks. However, it is really in a nice strong uptrend. VST 1.32, not a great CI rating. And again, earnings information, fundamental valuation, fundamental data aren't going to be the best when you're looking at oil stocks. Negative 61% earnings per share, negative 10% earnings growth rate, a little over 3 billion annual sales, negative 33% growth over the last year. So that probably will change here moving forward. Oil is definitely on the rise. You guys noticed that at the pumps, I'm sure. And so that's it. So overall, pretty good selection of stocks here. TPX and TCNNF, a little bit better than Marathon Oil, but they're all rising in price. Notice our RT ratings here for those three, all above 1.6. All right. So I'm going to go to the graphs. First, we're looking at TPX, Tempur-Pedic. I got a 3-month chart here, and we're looking at the Midas Touch layout. So this is a Midas Touch stock. This is a high momentum stock. So we're looking at price hitting a 3-month high. Nice, relatively smooth chart pattern here over the last 3 months. Higher today than it was 3 months ago. The indicators on the chart, the green indicator is a 10-period moving average, a 10-day moving average on the stop price of the stock. And the red line is a 65-day moving average on the stop price. And the indicator at the bottom is a 40-day moving average of RT. So the Midas Touch system, or the Midas Touch criteria is you need the green line to be above the red line, the 10-period moving average to be on the stop to be above the 65. You need the 40-day moving average on RT to be above 1, and also hitting a 3-month high. So all three of those are true. So this is a really nice Midas Touch stock. Its current price, again, is about $36.12. If I go to a 1-year chart, just to see maybe if we have any resistance. I mean, look at that chart pattern. It did split recently, but we'll take that split marker off. Just trying to see over the last year, do we have any resistance that we have to be concerned about? And we don't, not over the last year. Man, let's even go back further. I think it's at an all-time high. Could it be at an all-time high? Yeah, probably an all-time high. If I go to 10 years. Yeah, all-time high here for the stock. Really nice company. Never tried any of their mattresses before, but they're selling them for sure. So what I would look for here, and Glenn did say earlier, we got a little caveat here with today's hot stock panel. The market's been getting beaten up here over the last week or so. In our color guard, we have a lot of red there. The trend is down. You have to be aware that that's the case here. This would be, a good pick here. Let's wait for the market to just pick up a little bit better, a little bit more. Good pick though. What's that price? 36.66, guys. Is that the high of today?
Yeah, that's the high price today, 36.66.
36.66. So I would look for price to move higher than that tomorrow. It is late in the session today. It's 2:00. I don't know how many of you like to trade this late in the session, but I look for a new high here, whether it be today or tomorrow, to enter the trade. Okay, but a great looking chart here over the last 3 months, high momentum stock, and a really nice Midas touch stock. Here's MRO, different kind of layout here. I don't know if it's a Midas touch stock. Let me check real quick. I'm going to put on another layout so I don't screw up my layout. No, not a Midas touch stock. We're looking at 3 months. And the 40-day moving average on RT is above 1, but it's not hitting a 3-month high. So it's not a Midas touch stock. But what I have here is the 50-day moving average. That's the green line. And the 100, I'm sorry, let me change that to the 150-day moving average. So we got a golden crossover. Can you change
That's
that?
143.
143. Okay, I got it.
Isn't the golden cross at the 50 and the 200, or is it 50 and 150?
50 and 150.
Okay.
50 and 150. So we had that here. So we're a little ways away from the actual crossover, but this is a trending stock, right? This is the topic of today's presentation. Trending stocks that we can buy now. RT is good, 1.88.
Yep.
Stock's hitting a new high here. Let me zoom in. It's got a buy rating. Little flag pattern. Little mini flag pattern. Let me put on volume just to see. Did we get a nice spike in volume during that up run? Yeah. So we got a nice, so there's the flagpole. Little flagpole here, correlated with nice spike in volume. Volume is drying up a little bit, little consolidation pattern here. I'd like to see it break above that upper line there before trading it, before getting in. I can actually pull that down a little bit further. Doji about 3 days ago, moving higher, but the trend is up. The trend is up. It's got a really good RT of 1.88. Let me take off these moving averages and just give you guys a trend line here. I'll draw an extended line. Kind of connecting these lows here well above the trend line. Okay, so really want to look for a breakout though. We do see some consolidation over the last 1, 2, 3, 4, 5 days after that nice big run up again on really high volume. So I'd like to see a little breakout above that upper channel line there. Okay, and then the last one we'll look at, Tcnnf. This is one of the better marijuana stocks. So we didn't get the crossover. Boy, we'd have to go all the way back. When did the 50 cross above?
In June of 2020.
Way back here in June of 2020 at roughly $12. It's $40 plus now. So that was obviously the best entry long term. 50 and a 200-day moving average are longer term moving averages, trend moving indicators. But what I like now currently is the separation. You could see the 50 and the 200, that creating that nice separation, spreading apart. The trend is strengthening. So moving averages can identify the emergence of a trend, the beginning of a trend, and that's when a shorter term moving average crosses above the longer term moving average. That's the beginning of a new trend. They can also be used to determine strengthening trend or weakening trend as well. But here we're looking at a strengthening trend for sure. 50 above the 200, that separation that's being created by those two. The RT is 1.62, and let me zoom in here. Doji a couple of days ago as well, but really stopped right at that 50, got really close to the 50, and is retracing from it. So this is a really nice trending stock here. A lot of upside. Again, it's in an emerging industry group with long-term prospects for sure. But all three, this has a buy rating as well. And again, I have that RT on there at 1.62. So all three stocks are good buys now. The only thing that I would possibly wait for with Marathon Oil is that breakout above this little mini resistance level. So you got some consolidation there. You draw the line, connecting as many highs as you can, and wait for price to break above that. It's looking like it's heading in that direction. I'd like to see that breakout too, when and if it occurs, happen on high volume. That's really important. Okay. All right, guys. Well, thank you, guys. I hope you got a little out of that. I'm going to turn things over to Glenn.
Yeah.
All
but
right.
you know that
We're not
Patrick.
going to analyze the stocks?
Yeah, that's what I'm finna say. I got you. Goodness
okay.
gracious. God, you need a nap. All right, so we're gonna start off with Patrick giving some value add to the analysis.
Yeah, so first off with MRO, I like what you're looking at. I like the area. Yeah, oil's definitely been huge over the last 4 months or so. That's actually a very similar pattern for one of the stocks that I brought to the table today, where we've seen a lot of big names run up, have this temporary pullback, and are retesting that high for that breakout. So yeah, I agree. I think that's a good idea, waiting for that breakout. That's where the buy stop limit order definitely comes in handy there. The TNNCF or TCNNF, yeah, that one. You said it's the best stock in the marijuana industry.
One of them.
Oh boy.
Yeah, that comes in second behind GTBIF, by the way.
Which is actually
Green
third
thumb, right?
behind MJNA.
Yeah,
I'm just throwing it out there. You keep saying it's one of the best. It's second best behind GTBIF.
We know which one you like. Yeah.
And yeah, that's really the only comments I had. But I like your picks. I like that you're getting some diversification, and they look solid.
I agree. Hey, Jerry, click on MRO for me.
Sure. Which one?
That one. That's MRO. Oh, let's leave it on that one. So, oil. Everybody in here who comes to our YouTube channel, I want you to type in the room. What have I said that makes oil move? Type it in the room. I know we may have a little bit of a delay, but type it in the room. What makes oil move? There you go. Mark got it right away. And everybody should be typing the same thing. Nope, the dollar is for gold. The dollar is for gold, and oil does make, trucks do make oil move from place to place. But it's demand, and with the combination of a couple of things, there was a big pipe drilling deal that was truncated, stopped. That stopped the overflow of oil that we had. We had a lot of oil. We had as much oil sitting out in the ocean just waiting to come in to the docks as we had anywhere. So that's drying up, and we're getting into our own oil back again, and the demand is going to come up. Somebody made mention that as the world slowly but surely opens up, the demand for oil will run up. Jerry picked a great opportunity to show oil early enough that we can definitely keep our eyes on it. Oil could be a big mover. And then you know what else is going to happen? If we start traveling again, airlines are going to need oil. The cruise ships are going to need oil, all of that stuff. So just keep that in mind. And in regards to the TCNNF, Jerry, click on that one for me. Sure. That's a hot industry. Why? Because
smoking.
What you gonna say? What?
I said it's a smoking hot industry.
It's if you're not high on marijuana stocks, then you need to think about it. It's gonna be a hot industry. It is a hot industry, and just keep that in mind. All right.
You know what's something that could slow down that oil demand?
Oh boy.
Anybody want to take a guess at it? Coil drivers.
Oh boy, here we go. We're gonna get in it, and it could. That's gonna take a while though. That's gonna take a while. Somebody already asked about XROF in here, but that's gonna take a while to happen. GRWG is also a good stock in this space. All right, Jerry, thank you very much for those stocks. And I'm with Patrick. I love the diversity in the different stocks. We're not all sticking into one industry, which is great for our subscribers out there, big time. All right, before I go on to Patrick, especially if you're brand new, if you like the content here, hit the like button. Hit the like button. If you've got comments, put them in. If you're not a subscriber to the channel, folks, do not forget to hit the subscribe button. If your subscribe button is red, that means you ain't done it yet. Yes, I said you ain't done it yet. Click it. This is the kind of content that we put out there between me, Patrick, and other people out there. This is the kind of content that we do. And you know something else? Share this link with somebody you know in your social circle as well. All right? With that, I'm going to bring my other esteemed colleague, Patrick France, to the table. He's going to present his two stocks that he's looking at.
The younger, better-looking YouTuber on here.
Whatever. Not at all. Not at all. Whatever makes you sleep good at night, bro. All right.
Oh, I sleep real good at night. All right. Well, thank you, Glenn. Thank you, everybody, for your time today. Thank you for tuning in and joining with us. My name is Patrick France. I'm a senior instructor here at VectorVest. Some people like to call me the mobile man because I host a live stream every Thursday over on our Facebook page where I talk specifically about our mobile app and how to get the most bang for your buck out of the mobile app. Also, this whole month throughout the month of March, we have the 28-day challenge going on right now. If you're not part of it, you can use the link in the chat to sign up for it. And every single Thursday, I'm going to be talking about those sessions that they go through that week in the mobile and showing you how you can do that same type of analysis or as close as possible to that type of analysis in the mobile app. So if you're already part of it, really come join me, go over to our Facebook page, hit the like button, hit the follow button. All that helps me out and gets you notified every time we go live. So with that, let's go ahead, take a look at my stocks here today. And there we go. Finally got control. Let's get out of here. Oh, you had it closed out. All right, gonna have to get back in there.
Wow, he just closed out the whole software.
Who pulls up the graphs like that? Usually you just pull up a separate window for the graphs.
That was, oh Lord.
Yeah,
Sorry.
get me back in there. So while we're waiting, my two stocks that we're gonna be taking a look at is going to be Tesla and also Bank of America. The Tesla trade is more of a technical trade, more so than anything else on a major name. The Bank of America trade is going to be a hot industry right now, a hot sector, and one of the hotter stocks from that sector. And that's going to be the banking or investment industry or sector as a whole. So let me know when I can take over the mouse again.
Viewers. I got it.
All right, they're getting that set up here. While we're waiting, I also, for everybody that's talking about XROF, I just put out a new video on our YouTube page on XROF. So shameless plug here with that. After today's session, head over there, go check that video out and smash that like button as well. All right, jumping into it though. These two, Tesla and Bank of America, are going to be my top stocks here. So let's go ahead and graph. Well, before we even graph them, let's go ahead and take a look at the analysis on them first. Starting off with Tesla. Everybody knows the name Tesla. It's one of the biggest names in the market. It's been one of the best performers throughout the year of 2020 and even before that. Tesla has a really strong RV showing great growth potential over the next 1 to 3 years. Their RS is really strong, showing they have solid fundamentals at 1.4. And now this is where it gets a little tricky with the RT of 0.71. That tells us they are in a decline, which means for you as a retail investor, this could be buying it for the cheap, especially after we've seen the highs that Tesla's made over the last few months. Overall, the company still has a solid VST of 1.26, and I really like their comfort index. Their comfort index is looking at the stock's ability to withstand severe lengthy price declines. Essentially, I like to look at it as the resiliency factor. Stocks with a really high CI, what that tells us is that when they have these pullbacks, they have the ability to snap back and hit a new high extremely quickly quickly here, which is what you want in a stock. It is rated to sell currently because this is more of a speculative bet right now, which is going to be more of the technical play, which we'll take a look at here in a second. But it is rated to sell. I know, of course, I'm going to be the one that pulls that more speculative technical trade and goes with something that, has a low RT right now and has a sell rating. But my second stock is going to be more news driven and just because it's in a hot sector, and that's going to be Bank of America. If anybody's ever tuned into our live streams or part of our jockey club and heard me talk about the banking sector as a whole, they will know, since we're right outside of Charlotte, Bank of America is one of my favorite banking stocks to trade. And we've had a hot pickup in it and a lot of other banking stocks as well. But I got to favor my favorite of Bank of America here. Looking at it, the RV is below 1, telling us that, based off the current data, it does have poor long-term potential. But the RS above 1.0 at 1.21 tells us they have sound, solid fundamentals. And then the RT at 1.48 tells us it's in a nice steady uptrend. Now, for anybody who tunes into my Thursday live streams over on our Facebook page, you'll know there's a rule of thumb I always talk about. When looking for hot stocks or high momentum stocks, I tend to look for stocks with an RT greater than 1.4 and specifically rising above that 1.4 threshold. Well, this meets it, so that's why I'm sticking with this one here for the day. So with that, let's go ahead, take a look at the graph on these. And I'll just change my layout real quick. And go here, fill mode. All right, perfect. Zoom in a little bit. All right, so the first stock we have is Tesla. Now, one of the things I liked about it, oh, my lines got taken off. That's okay. So one of the things I liked about Tesla, you are off these highs here just from about a month or so ago. You've had a nice pullback. The stochastics, which is an overbought, oversold technical indicator, has hit that oversold territory or below the level of 20 and has started rising back above that level of 20 currently. DPO at the bottom, which is more of a momentum indicator, is still drifting lower, giving me a little bit of cause for concern. But when I look at the price and I see at this moment, we have the stochastics starting to rise and we have price potentially creating a higher low here, I like that look. It's an early aggressive look to it. And for everybody who maybe missed out on Tesla or, was looking for a buying opportunity to get back in or add to their position, as long as we stay above this this low set from, what date was this, guys? Do you guys see a date? The 23rd of February. That will tell us that that downtrend is dissipating and a new uptrend is starting to emerge. So this is very aggressive, but you can use stop criteria. You can use technical analysis to help minimize any loss in case it doesn't go blasting off from here. In case it does start drifting lower, we can set some reasonable lines in the sand to help us prevent major losses from it. One line of sand would just be simply using the low of that body here of the 23rd of February. If you want to give it a little bit more time to run, the other opportunity is using that low of that same day, but the intraday low. Either one of these would be good lines in the sand and show that as long as we stay above those points, the stock is no longer going down, and that means it's either going sideways or it's starting to go back up. So that was my first pick. I know it's oversold. I know that, it has a sell rating. It's been pulling back a lot off of those highs, but I like the setup here. It looks good. Another thing you could add on if you want to is a 3 and 8 EMA to help get a shorter time frame or a look or view of when momentum may be shifting back to the upside. That could be another way of taking advantage of this. So you guys have any thoughts on the first one so far?
Yeah, I love it. I mean, it's such a bargain price right now compared to where it was not too long ago. I love the 3 and the 8. Throw that on there. I'm sure the 3 is below the 8. A good entry would be a 3 above the 8. 3 EMA crossing above the 8. I also see just draw a trend line. Just connect those tops after you do that. So that could be another entry as well. Clear downtrend that we're in, and if you just draw an extended trend line, there we go. Yeah, 3 is well below the 8. So yeah, I agree. That would be a good entry. Waiting for that 3 up to cross above the 8. That probably will coincide too with a trend line break too, as well.
Tesla is a name that you just can't get away from. And could this be an opportunity where you're buying the stock on sale Absolutely. I am not as aggressive, possibly, as either Jerry or Patrick. For me, I'm looking for a little bit more confirmation coming off that level of support. And I'm the one that will leave a little bit more money on the table. I'd like to see it take out the high, but that's a lot of money before it takes out the high. That's a lot of waiting. So I'm with Jerry and Patrick in regards to if you want to get in after a pullback. Looks like the stock pulled down. It looks like it's consolidating. It looks like it's trying to do a little bit of a sideways mumbo, a little bit, even though, because the downtrend is dissipating a little bit. As you look at, there it is. Where's my mouse? There it is. As you look right here, that low is not lower than that low, and it's sort of kind of consolidating a little bit. But I'm with them both. This could serve as a beautiful level of support. Watch that bounce. Use the 3 and the 8 as a good early opportunity to get in. Buy the stock on sale because, again, it's a company that it's not going away. It's not going away, and this could be setting up for a good opportunity at a lower price.
Cool. So that's my first one. Let's go ahead and take a look at the second here. Getting back to it. Oh, there we go. All right, Bank of America. So as I stated earlier, Bank of America is in, obviously, the banking sector. The banking sector has been on a tear. It's been steadily rocking and rolling. With the fears we've seen over the last couple of weeks talking about potential interest rates, interest rate hikes, inflation, that kind of thing, Bank of America, once again, when we started seeing interest rates rise back in 2016, I believe it was, Bank of America was set to benefit one or the most out of some of the biggest banks out there based off that interest rate rise. So with talks coming again about potential interest rate rises in the near future or in the next couple of years, Bank of America could really be set up to capitalize on that move. It's already done phenomenally. It looks great. Just like with MRO, we saw a slight pullback here over the last couple of days, but now it's coming back up, trying to retest that high. This is where a buy stop limit order would definitely be advisable, and make sure you're putting it in above that previous high at 37.03. That way you make sure that the stock is continuing an uptrend and that it's not just a double top and buying at the high. But if you did, you already have the 3 and the 8 that could help keep you protected. Stochastics trying to get back above into that oversold territory, which as long as it stays there, that's fine. But DPO picking up, hitting a new high here as well. I like the setup. I like the overall play. It's in a hot sector. I just need to see it hit that new high, and that would give me a clue that, this rally is not done and there's still more profit to be made with this one. So that's why I wanted to bring this as my number 2 here today for all you guys out there. Glenn?
No, JD.
JD?
Okay. Yeah, I like this one too. This one as well. Financials is an industry that stands to benefit, right? If things change macroeconomically, inflation, interest rates are on the move. Financials is a sector that probably won't get hit as hard as the tech sector, for example. But this is a good one. Yeah, I'd like to see it take out that recent high as well, but it's a nice uptrending stock. The 3 is above the 8. Stochastics is a little bit high, but doesn't mean that you shouldn't take the trade. DPO is strengthening as well. Let's go to a longer term look. Let's maybe go to a 1-year chart.
All right. Let me get it out of fill mode. There we go.
Yeah, 1-year high. Things are looking good. And then go back to a 3-month. Just wanted to see if there was any resistance. It's at a new 3-month high. That big red candle there at the high, that formed a bearish reversal signal called a dark cloud cover. Now, you did get followed through the next day. Technically speaking, that pattern is still valid because price isn't
higher than that high candle.
The pattern itself, right? So it's still a valid pattern. You could still see a pullback or just a move lower from here. But that's why I'm saying wait till it breaks above that high just to be sure that the pattern has failed, and then the stock can potentially move higher.
Yeah, and just like with MRO, that's why I want to see, or that's why buy stop limit orders would definitely be a crucial tool for this kind of trade, is making sure that it is hitting that new high, voiding out that pattern, and that way we get an opportunity, or it shows that it still has strength to move higher.
Yep.
I'm a little different. Well,
yeah,
no kidding.
I know. I'm thinking that Bank of America running, even though interest rates are low, nobody's putting money in the bank yet still, right? Where's your money going? Money's still going in the market. The industry is running. I look back and I say, well, inflation is rising. No matter what the Fed chair says, because he did it in Congress and said, yeah, it's all cool, Daddy-O, it's all cool, we got this. Inflation is, if the market keeps going higher, prices go higher, inflation is an issue. There's no ifs, ands, or buts about that. It is. So I'm looking at the industry and I'm like, well, the industry is running. Wells Fargo, somebody put Wells Fargo could be all of the banks. I'm curious to know, maybe am I disconnected in that? Why is the banking industry rising? What am I missing? I'm curious to know. What am I missing?
The housing market, Glenn.
Oh,
because
okay.
housing prices, housing has been going gangbusters left and right with low interest rates. The stimulus money, people are using it to put money into a new house, using it for down payment, those kind of things. And housing prices have skyrocketed, and Bank of America does a lot of business for like housing loans.
For mortgages. Okay.
And that's why when interest rates started rising back in 2016, Bank of America was the number one choice for benefiting from those interest rate hikes because of their housing loans that they do.
All right, understood. I just wanted to know if I was missing something. And you're right. The whole housing industry is booming, especially with COVID-19. A lot of people are moving out of the city because they're working more from home. They're buying homes. I'm all on board with that. So I'll leave that there. But I like the pick. Just looking at the graph, I like the pick. A new high, and Jerry is right with that candlestick pattern, the dark cloud cover. And believe you me, it's not like I know all of these patterns. As a matter of fact, I call Jerry up all the time. Hey, Jerry, is that the right, he'll look at it and go, yeah, that's right. Or no, because, so Jerry's really good on that. And so I like the idea that it's still in play. Match that up with the stochastics being close to 80. That backs up the idea that it might have a little bit, that it could still have some pullback if you put those two things together. But nonetheless, I do like the move of the stock. And even on the pullback with the candlestick pattern with the backup or the confirmation, the 3 and the 8 held. The 3 and the 8 held. So I'm with that. I do like that. All right. That's my put. I just wanted to make sure I wasn't disconnected in any way, shape, form, or fashion.
No, and I wanted to get something that was not on the radar, wasn't one of the commonly looked at sectors. So I wanted to try to find something a little bit different, try to help add some diversity to what we're looking at here today.
Gotcha. All right. Thank you, Patrick. Love the insight. And so far from the both of you. Again, I'm going to reiterate again, if you're not a subscriber to the channel and you like what you see here, subscribe to the channel. It's just a mouse click. Just see this little mouse right here? Click this little mouse, put it on subscribe, click it, it goes boop, turns from red. There you go. It's just that easy. I'm just saying. All right. If you like the content, hit the like button. How many likes we got, Joey? Oh, man. Joey's usually on top
Joey's
of this.
sleeping?
183.
183. You was sleeping? He was. He's wiping drool from his mouth.
Oh, no.
183. How many people? We got a lot of folks in here. Let's see if we can pull off 500 likes today. Let's see if we can pull that off. If you haven't hit the like button, you like what you see, hit the like button. All right. So those are my two esteemed colleagues. Again, I thank you guys for being here, making these hot stock panels what they are. And both of you brought good stocks to the table, and I like the diversity in what we are bringing out there. My name is Glenn Tompkins. I'm a senior instructor like Patrick. I've been here, March just hit, right? I just made 17 years. Been here 17 years. I do a lot of stuff on YouTube. I have Trending Thursday here on YouTube. I do the color guard report. I used to do the navigation series, and then I sweep the floors, and I mop, and I clean the windows, and I fix the toilets. All right, so that's everything that I do. Just to let you know. But I have a lot of fun. I am probably one of the most unique personalities here at VectorVest, and I enjoy doing that. I really do. As far as stocks that you guys are asking about, we will not look at individual stocks in this presentation. We've got a lot of videos that we put out on individual stocks. Trending Thursday, we look at individual stocks. On Thursdays as well, when Patrick does the support for the mobile app, he looks at stocks. Those are the opportunities and the platforms where we will look at individual stocks. All right, so I want to put that out there. We're not ignoring you. We just won't look at them in this platform. All right. So with that, I'm going to get into the stocks that I've brought to the table today. All right, let's close that out. I'm not closing the whole program. I just want to make sure I don't do what Patrick did. Man, I don't know who does it. That was like a rookie move, what you did, Patrick. I still love you like a brother, but you just close out everything. But it's all right. Joey got it back up quick. The two stocks that I got into, I'm bringing to the table Sleep Number. That goes along with the that, because I'm not trying to say that 10 times fast. I'm still not saying it.
It's not that hard.
Huh?
It's not that hard of a.
It's that hard for me. And ArcBest, also known as ABF Freight. All right. So Sleep Number on the NASDAQ, and Jerry talked about that. That's for over the counter on the NASDAQ. It is optionable. Stock's price at 142, value 175. So this is a good value play. The stock is trading less than what it's valued at. Good upside from that perspective. Relative value, the stock's upside potential is compared to a AAA corporate bond or outpacing the market at 1.5 on our scale between 0 and 2. The stock's got a great opportunity, 50% chance of outperforming a AAA corporate bond. Relative safety, one of the safest stocks in this list. Look at that, Tesla Motors at 1.4. All right, so this stock consistently meets or exceeds its earnings expectations, and earnings is the engine that drives the stock's price higher. RT which is our technical indicator. The stock is definitely in an uptrend. It's moving. It's actually the fastest moving stock in this list. Right behind it is MRO, which Patrick picked. All right, it's got a good combination of value, safety, and timing. They have an earnings per share of $4.33 with an earnings growth rate of 21%. All of those are all good. So let's talk about Sleep Number. It used to be Select Comfort, changed its name in 2017. It has 610 stores in 50 states. This is a good, big retail. They've got sleep solutions, adjustable basis, and temperature, just like the Tempur-Pedic. Anyway, it's got temperature for both sides of the bed. So if my wife likes it cooler or I like it hotter or whatever, we can do that. And they got stuff specifically for kids. I don't know if you knew that or not, but Sleep Number beds for kids as well for better sleep. It's up over 114% over the last quarter. It was their best quarter ever. You know something? If people are spending more time at home, working from home, and they want to sleep at night, everybody wants good quality sleep. So Sleep Number, along with that TPX, that's where I'm going to say it, are good in that space. And just for Wall Street bets, this has only got a 13% short float. So I just want to put that out there. Wall Street bets, Reddit, leave it alone. That's all I got to say about it. All right. It's got a current earnings per share. If you go look at their website at $2.70, we've got an earnings per share forecasted at $4.33. So we're saying that at this time next year, their earnings per share should be $4.33. That's something worth owning. All right. Let's go look at the next one, which is ARCB, ArcBest, also known as ABF Freight. All right. Trading at $68. With a value of $79, I'm going to call that undervalued as well. Good upside potential, relative value at 1.37. 37% chance that it should outperform a AAA corporate bond. Relative safety at 1.29. Not as safe as all of it, but it's up there. This is a stock that consistently meets or exceeds its earnings expectations in an uptrend. Earnings per share at $3.73 forecasted by this time next year with an earnings growth rate of 15%. So I looked at this kind of information. ACB or ARCBest, it's got three segments of their business. They have a general services where they do general deliveries for everything. All right, for furniture, for food, for just traveling. If you look on the highway, you'll see their trucks up and down the highway. They've got another segment of their business that does strictly commercial, government, ocean, and ground as well. So they have contracts on a governmental basis, and they also do fleet service, so roadside repair and vehicle maintenance. This is a company that's got its hands, even though it's a trucking company, it's got its hands in a lot of different things, and putting all of that together, they are well-rounded as a company. So those are the two companies that I bring to the table. All right, I wanted to give you some background on the both of them before we go look at their graphs. Right-click, view the stock graph, maximize it. Let's go bring out the layout that I have for these. Where is it? Glenn Hot Stock Panel. There we go. First thing, VectorVest always likes to say that we like you to be in safe, undervalued stocks that are rising in price in a rising market. Well, if these are 7 trending stocks to trade now, I wanted to go along with that ideology. Here's my value. The stock's price is currently under its value. All right, I've also got a moving average on here, and I believe it is an exponential moving average, 50-day exponential moving average. Why? Because it's a good middle-of-the-road show of trend. You notice that Jerry used the 50 and the 150. That 50-day moving average from a long-term perspective is a great moving average. As long as the stock's price is above that 50-day moving average, the stock is in a trend. I like the volume. It's been pretty steady. I'm looking at a 3-month graph. It's been pretty steady. Earnings per share. Remember, this is our forecasted earnings per share. Earnings is the engine that drives the stock's price higher. Earnings just ticked up as the stock's price is ticking up. It's higher than it was 3 months ago. Earnings growth rate was negative for a little bit, but look at this stair-step effect since then. Not only is the earnings forecasted a good number, good positive number, but they're growing that number, which means that the business model is working, that the inner workings behind the company are there. They're running their business well if they can continue to grow their earnings. And what's the most important thing in trying to get good earnings is sales. And the sales is right on par where it was last year, but I like that they're growing their earnings. Sales growth, in my opinion, needs to continue to grow higher to keep this stock moving higher the way that it is right now. Let's go put this on a 1-year graph. Look at that. Look at that. And at one point in time, it was trading over its value, and then the value rose. As the stock's price, the value rose, and now the stock is being back undervalued. And here was that time where it was. Earnings growth rate wasn't so good. And look at that, it's turned around. Something happened. I didn't find anything. Maybe it was a change in the management or something like that, but something happened that moved that, and there's the sales growth as well. That's a nice looking graph on a 1-year graph, and I'm going to let my colleagues comment on this if they wish to do so. Or they could just say that, Glenn, you're so awesome. That stock is so beautiful. We've got nothing to add to it. Okay, good. So we move on to the next stuff.
Sorry, what? Yeah, I mean, it looks good. I like the increase in volume. Earnings are steadily rising, bottom left, bottom right, everything you want to see. Only thing is it has made a pretty big run, or starting to pick up even more momentum here over the last week or two. So how would you address, managing that? Would you really allow it coming back from the 68 all the way down to the 50 where that 50 EMA is at? Or
so I'm glad you asked that question. I would use a shorter term moving average.
Put a 20 on, Glenn.
Yeah, that's exactly what I was going to do. I'm going to add a moving average, still exponential.
Yeah.
20, that's a shorter term moving average. So guess what? The 50 tells me that it's in a trend. I can get in and out if I want to capture profits off of that 20. So that's what I would look at as a way to get out of it. If I'm gonna need to get into it, I would go 12 cents higher than the high to make sure I'm buying into a rising stock. But that's a great question as far as managing it. The 50 was for the purposes of determining that there is an uptrend, a good long-term trend. The 20 exponential could serve as a good opportunity to help you to get out of the stock and lock in profits.
See, I'm looking at the 20 as a moving average to use to enter the trade.
Okay.
I need to see a pullback. It's a little too overextended. I mean, just look historically. You get these big run ups and you get a little consolidation, little pullback. So you're likely going to see that here, so risk reward, right? Are you taking on, what's your risk compared to how much money you can make? I think you're risking a little bit too much because it's so overextended right now. Wait for a pullback. Draw a line. Let's see. See the most recent high. I would love to see price fall back to the most recent high there. That if it does, it's what's called a sweet spot trade. If you guys have ever listened to Dr. David Paul, he loves trading these patterns. New high, nice trending stock, new high, pullback to the most recent high, settling into that level, and then retracing from it. That happens to be right where that 20-day EMA is. However, as we move forward in time, that 20-day EMA is going to continue to rise.
Yeah, right.
Yeah, so it's going to be a little higher. But I like a pullback here before entering this one personally.
Excellent. All right, let me go to my next stock. Put this back on a 3-month graph. A lot of people ask me, why do I like looking at a three-month graph? Because what happens every 3 months on the stock or every quarter on the stock? Earnings. Earnings is the engine that drives the stock's price higher. I always want the earnings picture in my graph before I analyze it. All right. Sleep Number. Same kind of scenario, nicely moving higher. Earnings per share definitely higher than it was 3 months ago. Earnings growth higher than it was 3 months ago. Sales growth, everybody buying them beds. Hey, Jerry, how much is a really good bed nowadays? Just throw a number out there.
A good mattress, probably $1,500. Roughly in that price range, I would say.
All right, Patrick.
I feel like Glenn, he's probably not the best to ask because he probably has to custom order them.
That's for a king. That's for a king. I got a king, not a California king, but a king. We paid about $1,500, which might even be on the lower end but.
So you take that along with the base of these beds, whether it's this or Tempur-Pedic. Yeah, I'm getting there. The money in these beds come from those bases and the adjustability in those bases. So a company that puts out that kind of, so you got to spend that kind of money and still growing their sales, people are really interested in sleeping better. There's no ifs, ands, or buts about it. But
what's their sales? What's their revenue? It's not on there, but you could throw it on there.
Actually, I probably have Sleep Number.
It's on the spreadsheet. If you
Yeah,
go
I'm
back
finna go there. Hold on. I got to find the mouse.
And what's the growth rate at 21%?
The growth rate is at 21%. Let's go find sales. 1.8 billion.
Nice. Wow, low float too. Look at that outstanding shares. 25 million outstanding shares. Wow.
Look at that.
Both of yours.
Huh?
Both of yours.
Yeah.
Both of your picks, low float.
So those are things that I tried to look at. I looked at and I was more in the shares, in the sales growth and sales numbers from my stocks for the purposes of, and you notice they don't trade nearly as much as a lot of the other stocks that we got up here, which means that these are slow movers. These are good stocks that are just doing their things. And a lot of times you hear people say that good investing is boring. You look at these average volumes, these are sort of kind of boring compared to everybody else. They just slowly, steadily do what they do. All right, any feedback on Sleep Numbers graph?
I mean, you can't go wrong here. I mean, there's nothing other than, what was that, a doji yesterday?
No, so what is that? That's a shooting star?
Where's the where's the open? I can hardly see it, but click on that date.
Today?
No, yesterday. So the
open was 143.
And
Close was 143. There was a 6 cent move. That was a doji.
Okay.
It was a
Yep,
doji, but shooting star.
Gravestone.
Gravestone doji.
Yep.
With follow through.
With a little bit of weakness today.
Yeah.
So another, is that a 20-day MA?
That is a 20, and you made me put on one.
Yeah, it's a 20 EMA and then the 50 EMA below that.
Right.
Okay, yeah. So a pullback towards the 20 EMA would be a beautiful entry. You could see it's done that a couple times.
Yeah, look at that. Pulled back, and maybe a possible pullback, but definitely stocks that have the potential to keep rising.
Yeah, so we're showing you guys a lot of uptrending stocks, but some of them have pulled back recently a little bit, and that's okay. So you're looking for a better entry. We joked earlier before we came on air, buy the dips, and you want to buy the dips on a stock like this, a nice uptrending stock above its 50, above its 20, above its 150, but pulling back to one of those shorter term moving averages or a most recent high. That's a good opportunity to get a much better price as opposed to buying at the high and seeing it fall for the next couple of days after you buy it.
Well, look at that. That was a high, pull back. That was a high, sideways move. That was a high, pull back. That was a high, pull back. And recently, just like Jerry said, we're right there again. And, possibly pulling back, that 20-day could look as a great opportunity. Now, if it pulls back and breaks below, you step back a little bit and go, no. But if it bounces, then you keep on rocking and rolling. Patrick,
and you look at those two moving averages, the 20. Look, if it breaks down below the 20, you got that 50 there to watch now. So if it stops at the 50 and retraces from it, there's your entry.
Patrick?
So yeah, basically Jerry already called it. I wouldn't really be interested in taking that, seeing yesterday's price action with the follow through here today. I'd be probably holding on, waiting closer to that 20-day moving average, and maybe take a look at stochastics, wait to see that it's oversold and see that it's starting to rise again or coming out of that oversold territory. So it's a great looking stock, has great performance, great earnings, great growth rate, everything that you talked about. I completely agree. I just think we could find, for a hot stock, we could find a potential better entry in the near future on this stock.
And I'm going to flip this a little bit. If there's anybody out there who owns the stock, at least now we've given you some insight on how to manage the stock. Just think about that too. All right, so, and looking at that 20-day and the 50-day, but I like it for the purposes of what we're doing for today as a potential stock to look at. And I love the way that you guys set it up, that if you don't want to buy it now, which I agree with, if you don't want to buy it now, what to look for better entry. All right?
And I think this just goes along with what you said at the very beginning, Glenn. Look at the market timing, where we're at. You're going to find some of these hot stocks that, are due for a pullback, and that's just going to create that good buying opportunity to get into these hot stocks at a better price. So,
and Ravi,
good one to keep on the radar.
Ravi, good question. It says, does it have to start going up after the dip before I buy? And Jerry was explaining that. Watching these bounces, and once it pulls back, watch these bounces off of that 20 as your opportunity to get in. That's what you're looking for, Jerry.
So an ideal would be it for price to fall to it, hit the 20-day, and then retrace from it. And the entry could either be on the retracement day
or the day after.
Or the day after, if you just want to be a little bit more sure that that 20 is going to hold, that's, that the price is going to, stay above the 20. So either because you're going to, again, ideal would be a red candle that touches the 20-day, and then a retracement that goes higher than the high of the red candle. That could be an entry if you're a little bit more aggressive, or wait for the retracement day. You'll have a nice unfilled green candle retracing away from the 20-day moving average, and then the following day would be your entry if price moves higher. So it just depends on you as the individual.
So Bill asks a question, buy a call on Sleep Number. The graph shows that it's going up. As long as you buy at least 45 days out, I think you'll be fine with that call. But keep your eye on the market. That's going to be the big thing. Keep your eye on the market. If this market does decide, I'm going to add this real quick. Keep your eye on the market. That's the most recent high in the market over the last 3 months. What's going on? We're pulling back. And even on the graphs that we just drew today, there's the 20, there's the 50. The market's still above the 50. That 20 is going back and forth. But the market is still in uptrend. Jerry, you agree? That 50-day moving average still says the market's in an uptrend.
So, yeah, short-term downtrend, still in an underlying uptrend. Price, a little bit below the 20-day moving average. That's considered a shorter-term downtrend, but still above the 50. You're still in an intermediate to longer-term uptrend. Now, if the VVC falls below that 50-day moving average, that's not good.
And that's when you Katie bar the door. Okay. I read that once in Dr. Dolito's video, in essay, and I was like, I don't know what that meant, but okay. I learned since then. All right, with that, we're done. If you bring us all three up, Jerry, what's your name? Joey. Yeah, Joey. They both start with J. That's why. Jerry, thank you for being here. Patrick, thank you for being here. And VV Nation, thank you for being here. How many likes did we get?
Only 288.
288. What did I ask for?
500.
500.
Yeah, and it didn't happen.
It's like people are sleeping on their sleep number beds.
Or their Tempur-Pedic beds. Yeah, on one of those. All right, let's see if we can get that up to 500 before we go. Thank you guys for being here. I do have something that I do want to remind you of. There's a couple of things that we have going on that I do want to bring to your attention. We do have something called the 28-day portfolio challenge, where we're going to teach you how to clean up and set up your portfolio for making money in the market. All right, if you go to the website, www.vectorvest.com/28, Joey's going to put the link in there if you're interested, especially if you're a subscriber. It's free. And if you're not a subscriber to the software, you can get access to the software for free during this challenge. All right, so I'm going to put that out there for you. And the second thing that we've got going on, if you like March Madness, we've got something called Stock Madness. And this is the same thing as playing the brackets for college basketball teams, except for we do it with stocks. We've got brackets for stocks. You go through, you pick what stock you think is going to finish higher for the week than the other stock, all the way down to the final bracket. You have an opportunity to win $250,000 cold hard cash. Well, let me say that a little differently. You got a chance to win $250,000. How about that? I don't know if that, wow, really? $250,000? It's the same thing as I said, it's 250,000 shares, $250,000. All right, here's the brackets. We've got stocks paired off for you already. Your job is just to pick what stock you think is going to perform better than the other stock over the week, and all the way down to the championship. If you come up with a perfect bracket, $250,000. Now, that's hard to do, but if you're not a subscriber to the software as well, other prizes that we have, how about we'll give you a 1-year subscription to the VectorVest software and $1,000 credit towards our educational, and Jerry manages that stuff. So we're going to give you educational credit towards courses. We have a lot of courses out there that you pay for, but if you win money to go towards those courses. All right, so those are the two things that I did want to talk about. The Stock Madness is fun, but the 28-day challenge is a great way to learn how to utilize the VectorVest software for free to learn how to weed the garden in your portfolio, to build better portfolio, to make money in the market. And that's it in a nutshell, folks. So again, thank you, Jerry. Thank you, Patrick. This was our hot stock panel for the month of March. Stay tuned for our next one for April. Remember, if you subscribe and you hit the bell icon, you will be alerted to all of the content that we're putting out. Patrick did a video today on XROF. I did a video yesterday on XROF. We try to stay on top of what's relevant in the market today. All right, so make sure you tune in, you join, you share this all over the place. Share it all over the world. Let everybody know what we're doing over here at VectorVest to help people make better buying decisions. So until the next time, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha. Salam, shalom, namaste. Have a great day, folks. See ya.